Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. In this video, I will be taking a pair, breaking it down from a technical and order flow perspective, and in doing so, I will provide as much free education as possible. So I really suggest that you stick to the video till the end, and I will see you on the charts. In today's video, I want to speak about AUD USD because at the moment we do have quite interesting price action and structure. Starting here on the monthly time frame, what we have in fact is a market which is currently testing previous monthly support turned resistance. And at the moment I will just be speaking about the technical side because later on we will be moving to the order flow. Now, as I was saying here on the monthly, as we were testing previous monthly support and resistance, there is definitely the possibility to see a potential rejection lower. We also know that since we have an impulse and correction, if we want to measure the correction, we have to take our Fibonacci from the high to the low of the impulse. And if we do that, we can notice how the zone that the market has just tested and now started rejecting is exactly the area in between the 0.618 and 0.786 of the Fibonacci taken on this monthly impulse, which is a very strong confluence of resistance that we do expect this market to reject lower. Dropping down on the weekly time frame, what do we have? Now, from a weekly perspective, we can notice the creation of a double top. We had the first high here, the market then went lower, tried continuing higher, created another top here. And from this zone, we could expect a potential rejection to the downside. Now, if we go down on the daily, what do we see? Now, from a daily perspective, we can notice how I spoke about AUD USD a couple of days ago when the market was around this area. I explained all the reasons for which we could expect this rejection to the downside. And by the way, I will link that previous analysis in the description so you can go and check it out for more free education. Now, that is exactly what the market did. The market gave us this move to the downside. However, in doing that, it confirmed that the pattern that at the moment the market is creating is that of an ascending triangle formation, essentially a wedge. Now, usually these are exhaustion patterns, and the market at some point manages to break out to the downside from these patterns. And considering that on the monthly and weekly, we have already identified that that is exactly what we would like the market to do. This is good because it means that if the market here will start breaking out to the downside, there is definitely the possibility to see more bearish continuation. Now, if we have to identify the structure here on the daily, we would clearly identify this as the previous low. If the market will manage to break below it, at that point, this previous support would be turned resistance, so that if the market goes for a break and then a retest, at this point we would have a retest of previous support turn resistance with a monthly, weekly, and daily time frames that are all bearish. And at that point we would have good probabilities on the retest to see more bearish continuation for the market to complete this impulse correction and impulse pattern to the downside. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, and we check the data for the AUD, we can see how with the last reports on the AUD, net positions have been decreasing. We went from having minus 27k net positions to now once again having minus 44k net positions, with shorts getting increased from 60k to 79k and longs getting overall decreased a bit. We didn't really have a huge decrease, but we were sitting in a situation where we had 39k long positions. We're now sitting at 35, so slightly decreased, but overall we see a lot of shorts added on the AUD from an institutional perspective. Now, it is important to keep in mind that if you're checking the data for the AUD, you are actually checking AUD USD because all currencies on the spot are traded against the USD. So if you're checking AUD, you are already checking AUD USD. This means that if we do get the successful break on the retest, we have good probabilities for this rejection lower. So how we could be approaching that move now? As usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best timeframes from a directional perspective. However, when it comes to confirmations and entries, the best timeframes are the intraday timeframes, so 4 hour and lower. Therefore, what we could be doing is monitoring price action from an intraday perspective during this move to the upside, waiting for the market to shift from an intraday bullish market as we would have to an intraday bearish market. And if the market would shift from an intraday bullish to bearish market and provide to us one of our valid entries, at that point we could be looking for a potential rejection lower. Now, if you don't know what I'm speaking about when I say valid entries and this kind of things, that is all part of the mentorship program, which you can find at transparentfxtrading.com. Here you have the possibility to gain access to my entire course with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower past the testimonials, you will see that at the moment I'm running a special promotion in which you have a huge discount on the upfront price of the mentorship program, a 400 euros discount on the one-time payment for lifetime access. And since I have partnered with the forex broker Blueberry Markets, if you open an account with them from the student dashboard, you can also get a full refund credited back into your trading account, which is optional. You don't necessarily have to join Blueberry Markets. And if you scroll lower, you will see that directly from here, there is still time to join before the timer goes to 0 and the offer ends. However, spots are limited, so if they get filled up before the timer goes to 0, the offer will end anyway and price will go back to normal. So I really suggest that you take advantage and join directly from here to gain automatically access with the email and password that you will create during the checkout. So definitely looking forward to have you on board. If you enjoyed the video, make sure that you smash that like button and comment below. It really does support the creation of more free education and analysis for all of you, and I'll see you in my next video.